Hey, what's up, guys? I'm going to do another video on one of the members of the Fang stocks. Nowadays, it's, I believe, referred to the Magnificent Seven instead, a little bit more updated term. Again, this is not financial advice, just some information for you guys to kind of look at before you make any decisions about putting any money into the stock market. In general, I would not recommend any new investors to do single stocks. Definitely ETFs and mutual funds are much safer. Okay, let's get it. Today we're going to do stock, one of the Fang stocks, ticker AAPL, Apple. So it's the A, one of the A's in the Fang. So Apple, let's see. Share price right now is $242. So not too bad, but if you don't have that kind of money to drop on more than one share or less than one share, there are brokerages that do fractional shares, or you can buy fractional shares. So you can put in whatever amount of money you want on one stock or multiple stocks. So you can take a look at those brokerages. I'm not super familiar with them because I myself use Merrill Lynch, which is connected to my bank. I'm pretty sure Schwab probably does fractional shares, but you can Google search it. Okay, next is dividend. So being a tech stock, typically dividends are either very small or non-existent. Either they have no dividends or a pretty small dividend. Tech stocks, growth stocks, things like that are pretty low dividend. Dividend for Apple is 0.41 of 1%. So, less than 0.5%, which I think is pretty standard for tech stocks. Next thing we can look at is PE ratio. That stands for price to earnings ratio. So this ratio can give us an idea of whether a stock is overvalued or not. PE ratio for Apple is 40, which is pretty high. Anything above 15 can possibly, arguably, be considered overvalued. Most tech stocks are probably going to be overvalued. So a high PE ratio can either mean the stock is overvalued, or it could mean a lot of people believe the stock has, both the company and the stock price has potential to skyrocket or increase over time. So it can mean one of two things. Sometimes hard to tell which it is. Again, in my opinion, probably the latter. I think it has room to grow. If you follow Berkshire Hathaway, has I'd have to look it up. I believe probably close to $100 million dollars worth of investment in Apple. They have sold some, I believe, end of last year, but I believe it's probably still their largest holding in Berkshire Hathaway. Next, what we'll look at is EPS, earnings per share. EPS of Apple is 6. We'll go back to that. Next thing we'll look at is stock sector. Obviously, it's tech, information technology. Obviously, most of the stocks in Fang or Magnificent 7 are going to be tech, probably. What's the next thing to look at? Why don't we look at 52-week range of the stock price? So Apple's anywhere from 164 to $260. So current price is 242. So it's pretty close to the 52-week high. Again, just my opinion. Apple's pretty safe stock. So as long as you're going to hold long term, meaning anywhere from at least 1 to 5 years, I think you're pretty safe buying Apple at any price. Obviously, the closer you buy any stock, closer to 52-week high, there's probably a very good chance that the stock, you're going to lose money in the short term, because the more likely than not, the stock price will drop if it's been, on a tear and been going up for a while. I do personally own Apple. I started investing in Apple in 2016. The best performing share Apple I have, I believe, is up about 900%. So long term, I think it's a great stock. In general, single stocks, personally, I would not buy at 52-week high. I would try to buy it at least midway between the low and the high for the 52-week range, or best case scenario is buy towards the 52-week low, if anything. Okay. Next, what can we look at? Okay. Technical analysis. Okay. Basically, technical analysis is looking at whether it be 1 year, 10 year, usually 1 year or less, 1 year graph or chart of the stock price, and based on the movement of the stock price, trying to guess what will happen next. Some people consider technical analysis similar to reading tea leaves. So give that a grain of, keep that in mind, or take that with a grain of salt, I think is what I'm trying to say. So technical analysis, I mean, for the most part, I think it can be somewhat helpful, but obviously no one's a psychic, not even professional traders. So I personally don't believe too much in technical analysis. I mean, obviously, if you see, that the stock has been trending low or decreasing in price for, 1 to 10 years, then sure, I probably know that it's not a great stock to buy. And vice versa. If the stock price is parabolic, then you probably want to hold off and wait. Or if you do buy, just keep in mind that stock price is probably more likely to crash than keep on going up. Okay, so technical analysis for Apple, it's up and to the right. So up and to the right. So I think it's doing fine. It's not parabolic yet, but obviously there's a lot of investment in Apple. So, and it's at 52-week high almost. So be a little careful if you plan on buying now. I might wait a little bit. Yeah. So comments. Again, I think I already went over it. I'm a believer in Apple. So is Berkshire Hathaway. Best for best performing share of Apple I've had is up 900%. I started investing in Apple in 2016. It's done well for me. Actually, best performing single stock I've ever bought. Apple is actually probably the third stock I ever bought 10 years ago when I started investing. First stock I ever bought was an oil stock. Um, it dropped after the first week I had it and I sold it. Second stock I ever bought was Berkshire Hathaway, and third stock I ever bought is Apple, and it's doing great. Okay, well, yeah, so those are kind of the basics. So why don't we go back to EPS, or earnings per share. So basically, you can think of earnings per share. If earnings per share is negative, obviously, it means that a company is not profitable yet. So any positive number means the company is likely profitable. So let's see, what's I guess what's an easy definition? Basically, EPS you can calculate by dividing the number of you can divide the company's net income by total number of shares outstanding, and that should give you the EPS, or earnings per share. Okay. All right. Well, thanks for listening. See you at the next video. Later, guys.